Hi everyone and welcome to a new video. It's my first video of the year, so happy new year to everybody. In this video I'll take a look at the things I've learned in 2021 and how I will apply them in my crypto strategy for 2022. If you like the sound of that, be sure to hit that like button and don't forget to subscribe at the end of the video. In this video we will discuss several topics. Of course, I've added some timestamps in the description of this video, so if you're short on time, just jump to the section that you're interested in the most. Now, before we continue, I think it's important to note that, of course, this is not financial advice. I'm just sharing my journey with you guys. I'm just taking a look at what I did wrong last year and hopefully how I can improve this year. This also means that if you have a few good tips, don't hesitate to post a comment and share this with everybody in the community. First thing that we're going to discuss is FOMO, which stands for fear of missing out. So fear of missing out is the enemy number one in investing. The typical example is your friends just bought a coin, it went up 20x, and you're thinking, wow, this has gone up so much, it will continue to go up, and I want to make easy money as well. So without doing any research, you throw in some money, and guess what? 2 days later, the coin starts to crash. Of course, again, you didn't do your research, you don't know what's going on, so you panic and you sell it at a loss. This is the typical example of fear of missing out, screwing with you and causing you to lose money. Now, another situation is also possible. You invested early, you bought the coin at $1, 2 weeks later it's going up all the way to $50, so you made a nice amount of money, but you're thinking maybe this can go even higher, so you don't want to sell anything. Guess what? 2 days later, people start taking profits and it goes down 10%, and you say, well, it's fine, I made a good amount of money, it's still good. It goes down 30%, 40%, and then you're thinking, well, I should have sold at the top, but now I'm already at minus 40%. I'm just gonna keep it, now it's a bad time to sell anyway. And guess what? The coin continues to go down and it never recovers. So as you can see in both examples, these emotions are playing with you and they're preventing you from making rational decisions. So I think the most important thing to remember is if the money comes in easily, it will go out easily as well. So the first coin we want to take a look at is Star Atlas. Star Atlas is a game. So when it comes to timing, it was really good timing. It was in the middle of the gaming hype, so it was a good coin to look at. It was getting a lot of attention on YouTube and on social media. So this was definitely an interesting project, and that's of course why I wanted to get into this project as fast as possible. So what happened? Well, I wanted to jump in early, so I bought at about 20 cents, and guess what happened? It went up a little bit higher and then it completely crashed and it never recovered back to that price. So what exactly went wrong? So to evaluate my decision, I go to ICO drops. This gives you a little bit of history. It shows you all the data of the launch of a certain project. So in this case, we see that the project launched at $0.00138 US. This means that everybody who was able to buy into the IDO, so before launch, they were able to buy it for less than 1 cent, and a lot less than 1 cent. So an important lesson to protect you from FOMO is doing your research. I mean, if I would have taken a serious look at all the launching data, I would have known that people would have had a 200x at these prices, which of course is insane. It is really normal that people take profits when they can make a 200x on an investment. So again, lesson number one, do your research and be realistic with your targets. The second example is Kawaii Island. It's another game. It launched on Polkastarter. I was actually selected for the whitelist. Sadly, I messed up. And again, so my emotional state wasn't that good. I was pretty sad that I missed this launch because I really liked the game. So of course, what happened? Yes, on day one, I bought into this project for about, I think it was 16 cents. Then luckily, it started going up, so I was like, yeah, I made a good decision to buy it aftermarket. And guess what? A few days later, it started to correct. So right now, I'm at a loss, and I think even if you would have bought at IDO, you would still right now be break even, or at least not at a profit. Then it's time for the third and last example. This was a DeFi project that also launched on Polkastarter in the beginning of last year. April was still a really good month, so everything was going really well. The coin went up, I think, a 20x on launch, so there was a really nice profit. But guess what? I didn't take my profits because I thought, well, the market is going up, this coin will keep going up. And guess what? Just like all the other coins, it corrected, and so far it hasn't recovered since. So another important lesson here, almost all the coins that have hype, they will correct at some point. So if you're not able to participate in an IDO, don't worry, don't buy on launch, just wait, and all the coins will eventually correct themselves and there will be plenty of opportunities to buy in. So important thing to remember, if there is easy money involved, it also means that there is an easy correction. So if a coin goes up 200x after launch, you can be certain that there will be a correction because people will take profit and they should take profit. The second tip that I can give you is take a look at a bunch of IDOs or compete in a lot of IDOs, because in my case, I almost never sold any of the IDO tokens that I got, and I saw them going up and then I saw them going down, and most of them never really got up again. Now, because I went through so many IDOs and I just held my tokens, I was able to really closely see how all these coins evolve, and this of course gives me a certain amount of confidence. This doesn't make me immune to FOMO, I still make these mistakes, but I did notice that I'm making a lot less mistakes because of this. And I think this is an important final conclusion. It doesn't mean that even if you know rationally that you shouldn't do it, it doesn't mean that you will not do it in the heat of the moment. And this, of course, it takes practice. And by doing all these IDOs, by seeing them evolve, you're practicing your mind and you're creating a certain amount of confidence that will prevent you from FOMOing into each and single coin. Alright, this brings me to the topic of trends. If you've been into the crypto market for quite some time, or maybe at least for 2 years, you have probably seen several trends. For example, the DeFi trend, the gaming trend, NFT trend, and so forth. Personally, I really think if you're able to identify trends really early on, you're able to make a nice and quick buck. Now, it is very important if you want to play a trend, then you have to plan an exit as well, because trends don't take that long. Usually it's 2 or 3 months and then there's a correction. Some trends come back, some trends don't. So be really careful with this. So I think the most important conclusion is if you really want to play a trend, immediately plan an exit and don't plan it too far ahead. As I said, most of the trends, they only last 2 or 3 months, and again, they can come back, but you don't want to take the risk of a trend not coming back. Let's take a look at a quick example. If you were around in 2020, then you've probably heard about the DeFi summer, and this is exactly what we see right here. So if you bought into synthetics here, then you had a nice run up, but if you didn't sell, well, then you probably rode that trend all the way back down. Of course, in 2021, we just had a general really good year, and all the decent coins, they stayed around and they went up as well. But as we can see, right now it crashed in the summer and it didn't really make a recovery since then, because when it comes to DeFi, there hasn't been that much hype. So in this case, even if you think DeFi is here to stay, there was clearly a DeFi summer, so there was a trend. You could have taken some profits here, bought back in here, and then ride it all the way up to this zone. But if you don't have a plan, you just buy it here, you see it go up, you cry when it goes down, you're happy when it goes up, and then you cry again when it's back down here. So this brings us to the topic of taking profits, and this is probably the most important one. As we discussed, you can also have FOMO when going out of a coin, and this is usually when a coin is going up really high, you have some nice profits, but you think you will get even more profits because everything is going up, and guess what? A few days later, the market crashes. Personally, I noticed that I really meant it when I said I was going to take profits, but usually I didn't, because I was going to decide in the moment, and if you have to decide in the moment, your emotions will screw you over, because you see the price going up and you'll say, well, I'll take profits next week, I'll take profits next week, and then the price goes down and you say, I should have taken profits, now it's not worth taking profits anymore. So again, you don't take profits and you ride it all the way down. So let's just take a look at the Bitcoin price. So I started playing around with crypto back in 2017. Guess what happened? I rode it all the way up, and everybody was saying, this is never going to stop, it's going to continue going up. And of course it didn't. It crashed, it went back up, and then everybody was like, yeah, you see, it's going back up. And then it went down again. And then of course, after a while, it went down here and everybody lost interest, including me. Then back in 2020, I got interested in the cryptocurrency space again, and things were going up and up and up. And this time I said, I'm going to take profits. And guess what? In January, we went up, then we had that correction, and then I was crying. I should have taken profits, which I didn't. Then it went up again, and again, I didn't take profit. And then we crashed all the way down here, and I said, well, if we have a bounce, then I'm taking profits. And this is exactly what I did. I took profits over here. But guess what? At the first dip, I bought everything again here. So we rode all the way up. I didn't have a second plan, and I rode it all the way down to the moment that we are here. So what's the important lesson here? Well, basically, don't just take profits once. Have a plan to scale in, have a plan to scale out, And then, of course, as soon as you've taken profits and things go back up, you have to make a new plan. Otherwise, you'll be again deciding in the moment. And guess what? If you're going to 60 or 69 again, you're not going to sell because you're completely feeling the hype and everything is going back up and you're not thinking rationally, so you will not sell. Right, this brings me to my strategy for 2022. So basically, I'm going to try and solve my biggest issues from 2021, which is, of course, my emotions, FOMO in, FOMO out, not having a plan, not having enough follow-up. So these are the things that I'm going to try and tackle with my strategy. So the first thing that I'm going to do is set a specific target, and my target will be an asset target and not a US dollar target. So this means that I'm going to try and accumulate a certain amount of Ethereum, for example, by the end of the year, and that will be my goal. Now, the system that I'm going to use is the system of the saving jars. This is something that is being used in personal finance a lot because this helps us as humans deal with our finances a little bit more efficiently. And of course, last but not least, I have to make sure that I have enough cash flow to continue investing in the assets that I want. So what do I mean with an asset target? Well, basically, I'm not going to look at the dollar value because the market, especially in crypto, it goes up 30%, it goes down 30%, and it will only make you depressed if you look at the dollar value. Now, if you believe in cryptocurrency in the long run, then I think it makes more sense that you just continue to build up on your different assets. So in my case, I believe in Ethereum, so this could be a goal for me to accumulate 50 Ethereum by the end of the year. Now, why do I think this is an interesting strategy? Well, basically, each time you sell something, you have a target. For example, I invest in an IDO, the IDO goes up 10x. I'm not just going to sell it in USD because I don't have a plan to buy another asset. So I'm going to sell it into Ethereum, and this brings me closer to the goal that I have of 50 Ethereum. Personally, for me, I think this will reduce emotional conflict and it will make it easier for me to sell or take profits. Another strategy, for example, could be that we have a mid-sized coin. We see the coin going up 10x and we see that it arrives in the top 100. This, of course, is a great performance and there is a possibility that it will continue to grow, but let's be honest, it's already a really great performance to become a top 100 coin. So in this case, you might decide to sell 30% and contribute it to your ETH goal. Now, as I said earlier, I'm going to try and work with the system of saving jars. As you can see, this is a very simple example. You put a few jars at home and you say, well, this percentage of my income is going into the saving jar, this is going in the retirement jar, this is going to the mortgage, and this is going into my vacation or fun jar. Well, we're going to do a similar system. So in this case, we're going to use a free cash jar, a short-term jar, long-term jar, a little jar with buy the dip money, and of course a retirement jar. So free cash means this is some money that we have on hand that we're going to use to buy some short-term investments or to dollar cost average into the long-term investments. Next, we have short-term projects. This can be NFTs, this can be trending coins and so forth. These are coins that we want to sell within 2 months. Next, we have the long-term coins. These are, let's say, the L1s that we want to invest in. So these are the coins that we think that in the upcoming months will do very well. The fourth jar that we have is the buy the dip money. So this is money that we just continue to accumulate and we keep it until the market really dips. This can be, for example, minus 30%, 40%, 50%, whatever you feel comfortable with. And as soon as we dip this hard, we're going to use this money to buy additional coins for our long-term projects. Last but not least, we have our retirement jar, and this is the jar that we don't touch. So the most important thing about the retirement jar is that you really don't touch it. So my suggestion is that you buy a separate ledger and put these coins on that ledger and then hide that ledger or put it somewhere that is not easy to reach. So definitely don't put it next to your PC so you can't really quickly use the ledger, transfer some coins, because then the temptation will be too big. So it's very important. The retirement jar we do not touch. So we got all our jars set up. How does it work? Well, I personally suggest that you evaluate your whole setup every week. If you don't have that much time, then do it every month. This automatically means that you don't want to have too many coins, because if you want to do your homework and you want to do your evaluations correctly, this means you have to look at each coin, see which one you want to dollar cost average in, see which new coin you want to buy, see which coin you want to sell. You have to evaluate all your short-term coins. So this takes a lot of time because you have to do your research, otherwise you cannot make the right decisions. So basic conclusion, if you have 100 coins and you only have 1 hour per week, then it's not going to work, because you will be able to evaluate one coin, and everything else you will just ride all the way up and then all the way down, and you will never take any profits because you didn't have time to look at your coins. You didn't have time to choose your exit or entry points. So as soon as we take some profits, it doesn't matter how much, if you sell all the coins or just few coins, as soon as you have a certain amount of free budget, then you can decide what to do with this money. So you could, for example, decide to put 1/3 into the free cash jar, then 1/3 into the buy the dip jar, and 1/3 into your retirement fund. Of course, once we have some free cash in our jar, then we have to decide what to do with this. Then we can decide to either dollar cost average into the long-term holds. We can either keep some money aside for a new project that is coming up, for example, an IDO, or we can buy into a certain trend. All of this, of course, depends on the goals that you have. In my case, I will probably put everything towards my goal of getting 50 Ethereum by the end of the year. The last thing that I want to discuss is cash flow, because if you want to continue to invest, you don't always want to be selling coins if you want to buy something new, and we really want to grow our portfolio, and we can do this, for example, by saving a percentage of our income from our regular job and investing that into our free cash jar. Another thing we can do is get staking rewards by using the different DeFi platforms, and especially if you have a specific goal, for example, work towards 50 Ethereum, 100 Ethereum, or 5 Ethereum, it doesn't matter. You can decide to lock up those coins and get interests on these coins. Now, what you do with this interest, of course, it's up to you. You can decide to reinvest it into your current goal. For example, you can accumulate more ETH with it, or you can say, well, the percentage that I'm getting on interest, I'm going to put into my free cash jar. Of course, there are a lot of things that you can do that I'm not thinking about, so if you have a really cool idea, don't hesitate to post a comment, share it with everybody else in the community so we can all learn from each other. Alright, that's it for this video. I hope you guys enjoyed it. I've never made a video like this, so if you like this type of videos, be sure to hit that like button and also post a comment, because that will help push this video in the YouTube algorithm. Thanks again for watching, and I'll see you guys in the next one. Bye.